All right, so daily chart, get a rally, obviously out of this triangle, and it was fairly strong. And it's a strong enough rally. I think buyers below. I think we will reach a new all-time high above last week's high. Unlikely to form a lower high and just endless pullback. Bears, I think the bears realistically are going to have to make the market go sideways for a lot of bars. They just have not done enough to undo the most recent rally. We have the obvious magnet of 8,000 above. And what are the chances we just go straight up to it? I don't think we will. Realistically, if we start to get to 7,900, what do you think is going to happen? I think we'll probably end up finding sellers around that location. I suspect sideways to up most likely, but if we start to get to 7,900, probably sellers around that location. On the Globex chart, we had a lot of sideways. We rallied on Sunday evening, and then we sold off, and we pretty much went sideways for most of the overnight Globex session. And interestingly enough, the range, when I say that, and then the market rallied and then reversed. But overall, fairly boring range. 5-minute chart on the open, we formed a doji with bar 1. And you look at that doji and you think, what about selling? I would not. For me, that doji is enough disappointment that the odds are we're probably going to end up being mostly sideways. And it's not a great sell below the bar, so probably buyers. Bar 2, we have a bull bar, tail above the bar. Not a great sell above the bar, so I suspect we'll probably go sideways and get some kind of reversal up. 3, bear bar, not a good sell, probably buyers. Right now, probably strong enough rally last Friday that we'll probably try and get some kind of second leg up. And then 5, doji, looks like going more sideways. 6, bull bar, good for the bulls. We may end up going at least a little bit higher. And then 7, a follow through bar. We have consecutive bull bars, 6 and 7, good for the bulls. But an expanding range. And unless the bears can get a strong downside breakout, I suspect we're probably going to go more sideways to up. And then 7 and 8, we have consecutive bull bars closing on their highs. Good for the bulls. Increases the odds that we're probably going to go at least. That's good for the bulls, and it increases the odds that we're probably going to go at least a little bit higher. And then 9, 4 consecutive bull bars. Good for the bulls. Probably buyers below in some kind of second leg up. And then 10, doji. I suspect. How much higher will we go? We're probably going to go at least a little bit higher, but the bodies are getting smaller, and we have a series of bull bars in a row in a micro channel. So probably a pullback is likely fairly soon. And then 11, outside down, good for the bears. Probably buyers below. 12, outside up, good for the bulls. Probably going to go at least a little bit higher. And then 13, we have a doji. That's good for the bulls. But it's not a great sell, so it's good for the bulls. So probably buyers below. But this is a warning that we're probably not going to go a lot higher. It's possible we have a rally, pullback. We may need a more credible second leg. But we're so close to 7,800. If we get there, I suspect it'll probably act as some resistance. 15, bull bar, good for the bulls. And then 16, follow through. We have consecutive bull bars, 15, 16. That makes me think we're probably going to go at least a little bit higher. And then you can see what happens. Even though we have consecutive bull bars, 15 and 16, at least a little bit higher. You can make the argument, but one of the problems I forgot to mention was it's parabolic wedge and it's 2 legs up. And with the tails above, if you think the market's going to go higher and you see a big bar like that, usually it's better just to get out, because that's a strong enough surprise. How low can we go? We could get, the odds are you're going to get a second leg down, and we could sell off all the way back down here. So really, that bear bar closing on its low 17 is really, I think, a dangerous environment for traders to be selling. 18 consecutive bear bars, 17, 18. That is strong enough that the odds are we're probably going to find sellers above and get some kind of second leg down. 19, bull bar, not a good buy, probably sellers above. And then 20, breakout, pullback, sell, probably going to go at least a little bit lower. And then 21, we have a bull bar, but I still think probably sellers above and sideways. And then 22, we have 2 legs up and reversal and follow through, 21, 22. But again, I still think sellers above and sideways. 23, bear bar, not a great buy, probably sellers. And then we tried to reverse down 24, 25, 26. Good for the bears, but possible failed breakout of the 19 low and more sideways. And then 27, strong enough bull reversal. Can you buy it? I think so, but it's following a 5-bar bear micro channel. And 27 is a relatively big bar that increases the risk that there might be more traders buying around this location. We have 28. We have a bear bar, not a great sell, probably buyers below and a second leg up. And then 29, bull bar closing on its high. That's good for the bulls. I suspect we're probably going to go at least a little bit higher. And then 30, we have a bull bar. 30, bull bar, trying to close near its high, but overlap 29. Look where you are. You're testing the breakout points up here, and it's 2 legs up. This might be a location where bears start selling. 31, not a great sell with the tail below the bar, probably buyers below, but context is bad. And therefore, you always have to be thinking about the possibility of bulls getting trapped. Plus, you have bulls buying up here, buying more lower, scaling in. Break even is around here. Reversal and follow through, 31, 32. Good for the bears and make it a second leg down. In 33, now we have 3 consecutive bear bars. That makes me think that we're probably going to go at least a little bit lower. 34, we have a bear bar. We have 4 consecutive bear bars. Not a great sell, probably not a great sell. We may have to bounce, but as far as buying 34, I think it's tough to buy 34 when we're probably going to get some kind of, I think it's tough to buy 34 when we're probably going to get some kind of second leg down. And Doji 35. Do you really want to buy 35? I don't think so. When I look at 35, it's a doji and a tail, and it's really not all that. I don't think it's all that great of an environment. Bull bar. It's a weak bull bar. It's a micro channel against the bull bar, and to me, that makes me think that there's sellers not far above, and we'll probably get some kind of second leg down. 36, we went outside down. Good for the bears at this point. I suspect we're going to fall below the 27 low. Trading range day, and that's pretty typical. Now, the one thing going for the bears is we're in breakout mode, so we can easily break strongly to the upside or the downside. With this bar closing on its low, it makes me think that we're probably going to go at least a little bit lower. And in 37, we have a bear breakout, but closed above the midpoint. I suspect the bulls who bought 36 scaling in lower are probably going to be able to get out at the original entry. And then we have a follow through bar, but low one short, not a great sell after 37. 37 is a climactic bar, and that increases the risk. There's probably going to be buyers below scaling in lower. And then 39, we have a bear breakout testing the bottom third of 37, but I suspect there's going to be probably more traders buying around this general location. Bull reversal bar closing on its high, good for the bulls. We have micro double bottom, and the odds are traders who bought the 27 low is reasonable. If you bought the 27 low and then you got trapped on 37, it's reasonable for traders to scale in lower, and the odds are they're probably going to make money. And we had a doji on 41, not a great sell, probably buyers below. Second leg up 42, good for the bulls, close enough to the breakout point 27. I suspect we're going to get there. We pulled back 43. It's the second entry sell, 2 legs up, but probably buyers below. And then we got a bull bar 44. Makes me think we're probably going to go higher. And then we started forming dojis. Now, it's reasonable we're going to go higher here. It's less reasonable that we're going to go a lot higher here. What does that do? That increases the risk that we're probably going to end up getting a pullback. 48, doji, not a great buy, sellers above. And then you can see we started getting a bear reversal and then follow through 50 and 51. That increased the odds that we're going to get some kind of second leg down. And then bull bar 52, but I still think, probably sellers above after the bear reversal and follow through in a second leg. And then We tried to get the reverse. We got a small second leg down 53, but a further pullback. 54 and 55 do not look like it's enough for the market to undo 50 and 51. And then we got the bull bar 54. Good for the bulls. Are we always in long? Well, I mentioned we're right at the moving average. So buying at the moving average usually is not ideal. And then we got an outside down bar 57, triangle breakout mode. We may try and test somewhere down here. Follow through 58, good for the bears. And then doji 59, a sign of weakness, but not a great reversal up. And we have a bear bar 60, and then doji 61. I still think probably sellers not far above, but 2 legs down, waning momentum. We could easily get the upside breakout. And looks like we're starting to stabilize. And then we got the bull bar 63, good for the bulls. Probably going to go at least a little bit higher. Follow through 64, 65, and then more follow through 66. This looks strong enough that we'll probably find buyers below and go sideways and get at least a small second leg. Then we got a doji 67, bull bar 68, forming a little bit of a parabolic wedge, and it's 2 legs up, testing an area over here where bulls got trapped. So a little bit of resistance, and then we got a doji 69. And you can see we went sideways for a few bars, and then the bulls gave up, and the bears sold 72. 72, strong enough bar. We'll probably get a second leg down, but selling the close of 72 is selling a 50% pullback from the rally at the 61 low to the 68 high. And because of that, we may get a fairly deep pullback before the bears get a second leg down. Doji 63. I thought 63 was a warning telling traders who sold the close of 72 that we're probably going to pull back. And then we got the bull bar 74, but now you're in the upper third of the bear bar 72. Dangerous location to sell. And then we ended up getting the second leg down 77. So 2 legs down, and then we ended up finding buyers pretty much going sideways for the rest of the day. For stop orders, I thought the first credible buy, I don't think any of this is great. Maybe once you start to get a series of bull bars, maybe bar 6, probably better above 7 or 8. 8 after 3 consecutive bull bars, probably okay. But at that point, it's probably better to wait for the pullback and just buy the close of the pullback or buy below a bar for a scalp. And then I think it's difficult to buy above bars here. If you buy above 12 or you buy above 15, then you got to get out as that bar is going down. Worst case, you get out below the bar. But even then, I think it's not ideal. And then bears, they can sell 8, 17, or 18, but you're selling at the moving average at support. And therefore, you're probably just going to go sideways. All right, so that's all the time I have, and I hope everyone has a great rest of their day.